Hi everyone, welcome back. Hope you're having a lovely Mother's Day. In this video, I wanted to give my analysis of the S&P 500 and why this could be a present for the bears. Having said that, let's first talk about the bull and bear case regarding fundamentals. Do we think that this drop was enough and the market is out of the woods so that we can start a new bull run? What's the bull case? They say the market is forward thinking. But on a side note, I sometimes tend to disagree. I remember around here, they had announced the Wuhan lockdown, and the market really didn't care. I mean, it dropped a little, but then within weeks, it made new highs. It was as if this was yesterday's news. To me, if the market was forward thinking, I would think it would price the global situation a lot better and earlier. But that's besides the point. Regardless, let's look at this concept for the bull case. If the market is forward thinking, then when it goes down, the economy is still growing. And when it goes up, an economic recession may have just been reported. So if we use this concept, do we think that this was the completion of wave 4? In other words, the economy during this time was doing good, unemployment was low, everything was fine. But the stock market was in a correction sideways since 2018. And now the stock market is going to rally and the economy is reporting recessionary clues. When a recession is announced, that's when the Feds lower interest rates, which is what we have now, along with other stimulus. So it makes sense that the market would be in a bull rally. So what I'm trying to say is the fact that the market dropped or has been in this correction for 2 years now, and then the Fed stepped in, fits the bill that the market moved first, and then now the economy is experiencing this correction as the Feds intervene. I mean, job data and GDP are backward looking. Obviously, from this low, the market is seeing something even with all the negative economic news. Does the market anticipate a smooth reopening? Is the worst over? Perhaps the Fed and the government responded early to mitigate the damage, which will result in a quicker than expected recovery. One of the differences of what we're experiencing now versus the Great Depression is that the Feds quickly stepped in with monetary policy now compared to then. During the Great Depression, there was a liquidity problem. Another point is that if unemployment was a result of the virus, perhaps when we reopen, jobs will easily come back. In the meantime, let's just use stimulus to do what it's meant to do, stimulate and keep the economy afloat. But is this expectation going to be reality? I mean, even if this was the completion of wave 4 of the bull run that started in 2009, I just don't think fundamentally the market already priced in everything for the virus and is now going to move forward toward expansion. To me, it just doesn't make sense fundamentally. I don't see how this correction is over. Which brings me to the bear case. In a recession, the impact is severe. Is this the extent of the economic damage, or is there going to be more blood? From an economic standpoint, there is already a lot of blood, but is there room for more? They say don't fight the Feds, but there's a disconnect. For the market, it's the elite versus the rest. I mean, when is this divergence going to catch up with the market? How is it that the stock market continues to go up as people lose their jobs? Feds are pumping money, but unemployment continues to be high. If stimulus is expected to stimulate the economy, then why are layoffs growing and spending decreasing? Isn't stimulus supposed to ease the burden? I feel like until the virus is contained, how can the economy grow and how can spending increase? Unemployment reached 20.5 million in April. Do we honestly think this is just a blimp on the calendar and is not going to have a lasting impact? Do we think consumer spending is not going to change moving forward? Just take the airline industry. It was hit hard. I don't see us going back to the way it was. Social distancing is going to cut things dramatically. Flights, cruises, restaurants, shopping, sporting events, festivals, conferences are all going to impact the economy. Although some workers are currently furloughed in hopes that they'll get to come back to their jobs, there is a big chance that current logistics of reopening is best case scenario and not really reality. Are we just going to see unemployment continue to rise? The burden to businesses is definitely going to go up. I mean, a lot more precautions now have to be considered. And at what cost? There's no vaccine yet to help mitigate the infection risk. For example, even if Formula One comes back in the summer, they've already said there won't be an audience, so fans won't get to watch in person. Instead, they're going to have to figure out another way to continue fan engagement, and this is going to be a burden to the sport and high financial impact. How can we have an economic expansion then? This is the opposite. There is a lot to think about for the stock market's future and a lot of questions. It's good to know these things, but in the end, there's always going to be a bull and bear case, and the future is uncertain. So leave a comment and tell me what you think regarding the fundamentals of what's going on right now. So with all this news to digest, what is there technically based on the charts? I like to use technical analysis to help find patterns and look for possible trades while limiting my risk. As mentioned in last week's video, we seem to be at the same spot, at this 618 retracement, bouncing between these resistance and support areas, and then also bouncing within this ascending channel. So now what? This week, I think we're going to get more answers. Are we going to break out of resistance, or are we going to break out of this channel and head down? I'm on the downtrend side right now because if we do break resistance, where can we go? I don't know if there's much potential upside. First, we have 3,000, which is a huge psychological number, and it corresponds to this gap here, and then also these highs. And then next we have the 786 Fibonacci level, but that also corresponds to this resistance line from this high. So last week I was leaning towards us starting the downtrend, and I said I would be interested in getting back at a pullback. I would say that this might be the setup that the bears have been waiting for. For example, you could do the break of this low on this candle that we made on Friday with the stop at the high. So this would be a low risk and a good profit potential. The only negative with this trade would be that we don't have confirmation that the trend has changed yet, either with moving averages crossing over or the break of a previous low or break of this channel. But I like this type of trade because it's a good way to minimize risk and maximize profit if we do go down, especially if we do go down huge. You're probably asking, why go short now? I mean, we've made many highs before, but what makes this setup different? So just to go back, in a previous video, I had mentioned when we were at this candle here that this might have been the sign of an evening candle, but we had to wait for a break of this line to go short, which never happened. Then we had a new high, and again, we didn't break this red candle to go short, so it never happened. And then moving forward, we had this high, and we broke resistance, but then we came back down to support. So this does look like an island reversal, and so it would be a good opportunity. And then on top of that, if we go to a smaller time frame, we did make a lower low compared to here, and we retraced to the 786 Fibonacci level. So you could have played this one, because if you look at the daily, if we go back, we did break, after the pullback, we did break this red candle. Let me see if I can zoom in. we did slightly break this red candle, and so it was a fake out. But again, with every trade can't be winners, so you have to have a stop, which would have been, the high of this candle. So you would have got stopped out, but at least you would have limited your risk. Okay, and then finally, what about this one here? Okay, so we made a new high, and then we went down, and then we had the pullback. So why not this pullback? Entry to go short here with the stop here. Why wouldn't this one work? And to answer that, let's go to a smaller time frame. Okay, so looking at the 30-minute time frame, this was the high that we're talking about. So why didn't we play here to go down? And I think the reason why I would not be really interested in this one just yet is because we had a big move down, but I don't see 3 waves as far as the correction goes. I know we technically, have a gap here, but I just didn't feel that this was the right correction. I just didn't see, 3 waves like you would normally see in a zigzag correction, or, even 3 waves in a flat. I just didn't see that. So that's why I wasn't too sure to go short in this area. I think I was waiting for more confirmation or just something more. So now we are waiting for the next opportunity, which I think is setting up now. We've already established that we've failed to break resistance here at the Fibonacci level, and then also resistance based on previous highs. So if we look at the 15, since we made those highs, I can see that we had 5 waves down and then 3 waves correcting so far. And then within those 3 waves, for example this one, I can see 5 waves. So there might be a chance where now we finish this correction and we can go down. The only way we would know the answer to that is, if we break new highs, then obviously this is wrong. But if we break this level here, then there's a good chance that we are going down, because say this was the start of a new impulsive wave, and this was wave 1, 2, and then we're 3. 4 cannot go past wave 2 here, so that wouldn't make sense. So if we break this line, then I think we're going down, and if we break here, then we still have room to go up. Another thing is that if we break this level here, this corresponds to the ascending channel that we had on the daily, which is this line here. So that would be another, bearish signal. Is this the head and shoulders that we've been looking for? Or, maybe even just consider it a double top? I don't know. But the trade I'm looking at to limit my risk and maximize my potential profit is the break of here and my stop the high of here. And the reason why I'm thinking about going short earlier rather than waiting for confirmation like I had mentioned previously here is because if we go higher, my stop is here, so I'm limiting my risk. But if we go low, but still not break this line here, then I can move my stop to the high of this candle. That way, I don't get stopped out with a pullback only for the market to tank. Another reason why I would feel comfortable moving my stop at that point is that if this is, an A, B, C, or a 1, 2, 3, 4, 5, regardless, we are going to be headed in this direction. And then within this wave, we obviously have waves. So we have to anticipate, little pullbacks. So I don't want to get stopped out. So if we do head in this direction, even if we don't break it here, as long as we don't break this high at this point, I think we're still good to continue the downward trend and limit our risk. I hope that makes sense. I know it's kind of a little confusing, but that's why I would be okay if we headed down towards this line. Even if we didn't break it, I'd be okay moving my stop. That way I don't get stopped out on a little tiny pullback within this wave. And if we were to break this line, obviously then the trade is not working as anticipated, and I would want to, get out, limit my risk, and reassess. So yeah, this is a trade setup that I'm looking at, but obviously when the futures open up later today, we could either be going up or down depending on what happens. We'll have to reevaluate this trade setup, but this is what I'm looking for this week. I like to have a game plan. If it works, great, but if it doesn't, I think this would be good to limit my risk. And then if it does work out, the next thing I'd be looking for is how far down will we go. And then I just want to mention that I think this strategy is not only good to go short, but it's also a game plan for me to reduce some long exposure. So yeah, that's what I'm looking for this week. Let me know what you're thinking in the comments down below. Is my idea valid or am I missing something? I would love to read your thoughts, and if you like this video, please click the like button and subscribe, and I'll see you in the next video.